Thank you for doing this interview.
Thank you, Defi.
Please introduce yourself and tell me what you're doing.
Okay, thanks. My name is Jerry. I'm the co-founder and CEO of Term Structure. So Term Structure is a DeFi fixed income protocol, and we build this for users to be able to borrow fixed interest rate, and for fixed term to maturity. So currently, in DeFi, we don't see many fixed rate borrowing and lending protocol, but we see a lot of floating interest rate borrowing and lending. So I believe this is something that the market eventually needs. And my background is doing the fixed income trading for 25 years in the bank. So I believe this is a fundamental infrastructure for any financial ecosystem, right? We must have a money market. We must have something like a foreign exchange market, but we definitely need a fixed income market.
Okay, let's break this down a little bit just for people who are not familiar with some financial terms. So the fixed interest rate means that you borrow and lend, and it's a fixed interest rate, different than Aave, where the interest rate goes up and down depending on different factors.
Correct.
Right?
Yeah, and there is a maturity date.
And okay, yes, of course, that's very important. There's a maturity date.
Yes. So of course, for the money market like Aave, you can decide to repay or redeem at any time you want. But however, the drawback is sometimes the market moves a lot. If you are borrowing, if the interest rate goes really high on Aave, then you are forced to stop your strategy trading. Right? You got to
or God forbid,
earlier.
Yeah, God forbid you get liquidated. Right? The auto liquidation engine.
Yes, the beauty of the fixed income is that it gives you certainty, so that you can do your financial planning. You know what's the cost you're going to pay for the coming 3 months or 6 months, and then you know how much interest you're going to receive for the next, for the coming 3 months or 6 months.
Yeah, that's right. From my limited experience with, or I would say most people's experience with this would be through a mortgage, and you have like a floating rate mortgage or a fixed rate mortgage. Yeah. And usually fixed rate mortgages are more valuable.
Correct.
And harder, the banks have a higher bar to qualify for a fixed rate.
Yes, and the purpose of the mortgage behind is actually allow you to leverage, right? So you want to have a mortgage, and then you take this part of the money out, and then you can buy the second apartment, and then do the mortgage again, and then buy the third one, right? So this is what people do, and maybe you don't buy the apartment, but you need to use the money for something else. But here, the fixed rate borrowing and lending allows you to do the same thing.
Right. Okay, so can you explain to me and my listeners a little more why fixed rate products are so important? I understand that they are, and you see fixed rate products in traditional finance all the time. Very, very important. Yeah. But I don't quite understand why they're so important.
Okay, just a simple example. Right? Okay, if you assume the fixed income market in US dollar, US Treasury market is gone. There is no yield curve. What would the financial market become tomorrow, right? I would say the 90%, more than 90% of the financial product, they price based on the fixed income curve, the yield curve.
That's right.
So that you know the future value because you discount it back to today's value. So you know the price of everything give you the future cash flow, right? But today in DeFi, in crypto, we don't have the luxury. We don't know what we are missing. We are missing something big, right? And then you cannot price. You cannot do your financial planning, and then you cannot do the valuation for your future cash flow. That's the key thing.
Okay.
So when you go into the bank, the bank officer show you the products. Over 90% of the product is fixed income related. It's a yield curve related. There is a discount curve used for pricing that financial products. So without a fixed rate, you don't have those products.
Right. And then of course, like the mortgage rate and other lending rates are all based off of some
fundamental yield curve. Right?
Okay, of course, right. So then, right, you have your fundamental. Okay, I get it. Oh, interesting. Very nice. And just to step back a second, your 25 years of experience in traditional finance, I'm assuming you worked in the fixed income space. Is that what you?
Yes. I trade fixed income for 25 years, and then of course I also manage foreign exchange money markets, and the other derivatives.
Right. And you got interested in crypto
2 years ago.
2 years ago. How did you get interested in crypto? Why did you get into crypto?
Okay, it's a very interesting story. Like during COVID, and because my earlier job was in a bank, that I kind of to travel every week. But during COVID, I got to stay somewhere, right? And then I have the time to do some research, reading, and then I figured out, wow, DeFi is amazing space. A lot of innovation, creativities, right? It's not like a TradFi. Everything we've got to think. First thing we need to think in TradFi is regulatory compliance, right? And the legal documentation, all the process, like settlements, everything. But in DeFi space, it's like most of the time, the product can go as far as your imagination goes, right? So then I figure out, but the something missing. There is no fixed income. So this is something I did in the last 25 years. I wanted to try to see if I can build something there.
Why do you think there hasn't been any fixed income products? Or has there been? Or are you guys the first? It seems like, because this is so important in traditional finance, it seems strange to me that there wouldn't already be kind of a whole set of products for this.
Okay, that is, I would say, this is a very, very good question. Most of people, they don't understand, and I don't understand either before. Until I really do this for more than a year, and I can see that. All right, so this is a question I ask myself. Why not people doing that before? And why I'm not the first, but the very few first, right, doing this? Okay, so the thing is, the currently, the liquidity in DeFi is very important. And the liquidity in DeFi normally comes with a pool. So you have to have a peer-to-pool model. No matter it's like a Uniswap or Aave compound, you need to build a pool first. So this is a basically peer-to-pool model to create a liquidity in DeFi. However, fixed income has problem. If you take an example of Aave, right? If there's a 4 billion of the supply in Aave, but only 1 billion get lent out. So the 1 billion guys pays 4%. The 4 billion guys only get 1% because 3 billion of the asset was sitting there idle, right? So there is a nature of like a capital inefficiency in the peer-to-pool model. So fixed income, can you imagine? Borrow 4%, then they get 1%. Right? This is interest by block, you can accept it. But if interest confirmed for 1 year, then you're not going to accept this with such the wide bid offer, right? So it's very difficult for fixed income products to get there, right? And then that's why without this efficient, like a way to solve the capital efficiency problem, then there is a problem. There is a difficulty to build fixed income. And the second question is like, what about the order book or other like the peer-to-peer trading model on chain? Okay, fixed income is different from perpetual, right? There is a capital needed. Whatever you do borrowing and lending, you need collateral or you lend cash equivalent. So you need to put your capital in. It's not like a perpetual. You don't have capital, you can do the high frequency trading, but the borrowing and lending you can't. So that's why this is another hurdle for people to build fixed income protocol. So that's why we build in a different way. We build our own like a kind of a layer 2 under ZK rollup, and trying to help people to be able to like do in an efficient way, place order, use like a TradFi way to match people through the auction process, and to find the market price.
Right. Yeah. So if I can summarize, and you can correct me if I'm wrong, probably going to be wrong. The first problem is basically that the peer-to-pool system that's used by like Aave and some of these other like DeFi borrow lenders, you can have a mismatch between the supply and then the demand on the other side, right on the borrowing, and that makes it inefficient, and potentially like it would make it unappealing to participate. And then the second problem is you need a kind of a robust like order book style thing.
Yeah.
Whereas DeFi has basically been built off of like an AMM or something like that.
Yes.
And then to have an order book, you really can't do it on some of these non-performant chains like Ethereum mainnet or something like that.
We need to find a price discovery mechanism. Put this way, right? The order book is one way, and the option is the other way, right? But we cannot afford the heavy trading on the borrowing and lending, right? Because it uses capital, that like too much of capital compared with perpetual, like futures,
right? And so you saw these problems, and you decided to tackle this, and you chose ZK
rollup. Yeah, we build our own like a ZK true-up contract. Basically, it's a ZK rollup on our own like a DF chain, right? So because we believe that the fixed income products actually take like a significant capital, and then the user will really care about the like security or safety, right, of their assets. So we build our ZK rollup, and there is a forced withdrawal and the evacuation mode to protect the user's asset and make sure that we won't be able to steal our user's asset and their assets are safe.
Oh, very cool. Could you elaborate on that a little more? So you have,
the forced withdrawal, right?
Forced withdrawal.
Forced withdrawal is one of the functions that our user can use to trigger to ask to withdraw their assets. So let's say, for example, if one of the users they wanted to withdraw their asset and we don't respond, right? And we don't let them to withdraw at a certain period of time after they trigger the a forced withdrawal, our overall the whole system will stop functioning and only allowing people to withdraw. So that with that particular functions, then the people trust us. We won't do bad thing. We will allow people to withdraw. Otherwise, we'll get into big trouble and people will evacuate from ours.
Oh, very cool. That's great. So for your, who do you envision being most of your users? Is this more of an institutional product? Is this more? Do you envision retail doing this a lot?
Okay, I would say there will be combined of institution and the retailers. So of course that from the borrower side, it's very clear. Like most of the institution or like whales or like crypto traders, they do have a strong demand to borrow and to leverage and to do this the trading strategy, right? And in terms of lenders will come together with some institution plus retailers, particularly on the lender side, and we will see some people wanted to trying to find the fixed income, fixed return. Right?
Yeah.
So this is part of the targeted audience that we expect to see. However, from the borrower angle, there may be also lots of like the retailers looking for leverage investments, such as they can buy, for example, they can buy Pando's like a PT token as a collateral, and put in the term structure to borrow USDC, and then use that to looping further Pando's PT token, right? So then the borrowers become the retailers who wants to get 30, 40, 50% of return.
Yeah.
Do this leverage. It's not just the institutions.
And they're protected against any kind of crazy market interest rate spikes, right? Like
yes,
if they lever up.
Yeah, but of course that whenever you do this the leverage, there is a risk of liquidation.
Yeah,
right?
Of course.
Because the price fluctuation on the collateral is a risk that they're going to take.
Right. Okay, of course, yeah. What am I talking about? Yeah, of course. Thank you. Cool. And can I ask you about the vision of term structures' role in DeFi? So let's suppose that term structure is successful and it attracts a lot of capital, right? Because it should, right? People with large amounts of money, I think, would be particularly attracted to this. How does this help or benefit like the DeFi sector in general?
Okay. So just take a step back. If you can imagine what fixed income is doing in real life, okay, in US dollar, right? Just like what I said, you can create like a tenfold of different new products, right? Because you work in a bank, right? Show your products, 90% is fixed income related. They need a yield curve, right? So if we can be successful, we build a yield curve in DeFi, so that people can have the interest rate curve for 1, 2, 3, 6, 12 months, or 1 year, 2 year, 3 year, on the USDC, USDT, DAI, ETH, right? Then what we can imagine is that the option market, crypto option market will fly, right? Because the problem of the crypto option hedging is that if you ask any option trader, they will tell you the problem they have is they cannot hedge forwards, right? If I do like 1 year of options, I need to hedge 1 year forward, not a spot, right? But today, the option traders, they don't have a forward margins to hedge, right? So that's why if we have a benchmark, then they can do that. So of course, that the option markets, they will fly, and even the futures, you will see some of the expiry futures. The futures with expiry date for 1 to 3 months. Just like in the TradFi world, you can see it's not like 8 hours fixing.
Yeah, of course, right? Yeah, not perpetuals or anything.
Yeah, so it's totally different. Then with those fundamental infrastructure coming up, then you can see a lot more structured products. So similar to the investment you can see in real life, right? That you can find 1 to 3 years of structured product giving you the returns of the fixed or floating rates or certain structured payoff you want.
And so I'm assuming then the net effect would be a lot more liquidity in the system.
In the system for all different kinds of products, not just fixed income.
And for someone who's not very financially literate like myself, this all sounds very complicated but important. And it sounds like this would definitely attract a lot of like institutional and more traditional players into DeFi.
Yeah.
Which I think would be, in my opinion, more stabilizing, right?
Okay. Talking about the stabilizing, I would say if you can compare with emerging market where there is no fixed income market versus developed country like the US, right? They have a very developed fixed income markets. You can see the financial ecosystem and their currency, it's much unstable in those emerging markets. The reason behind is because they don't have fixed income markets.
Right.
So this is one of the study from the BIS. Like they have they have a
BIS.
article. Yeah, BIS.
Cool.
They have an article talking about this, right? And the fundamental reason is very simple, right? If you want a corporate or the bank institution in those emerging markets, you don't have a fixed income allowing you to borrow or lend fixed rates. And then you cannot match your balance sheet. Your balance sheet has mismatched with the floating interest rates. And then you only have the spot risk. Versus the corporates or the institutions in the US, they have a very beautiful balance sheet. They match asset and liability. So whenever there is a currency fluctuation, they don't need to running around to hedge the risk.
Interesting.
Right? Because they match the balance sheet asset and liability. Right? Then the overall whole ecosystem would be more stable.
So cool. Very, very cool. Yeah, that's great. Oh man, I am really excited about this product. I think things like this are really important to kind of uplift DeFi, which has been, flat to negative for the past couple years. And it'll be really, really important going forward to have products like Term Structure to really get, I think, the next wave of DeFi adoption, which is like more institutional, more, not going to say smart money, but like money that really has to be well kept and guarded.
Sustainable money.
Sustainable. Yeah. So thank you so much for your time, and I'm excited to see the product develop. Yeah, looking forward to, because I love DeFi. I love DeFi, and I look at the DeFi ecosystem, and I see meme coins going crazy, and I'm like, DeFi, oh my gosh. So yeah, thank you so much for your time, man.
Thank you, and I really hope that when people hear about this, and more and more people willing to spend time and effort helping us together to build a fixed income together in DeFi, right? I think the market is so big. We wanted to see more people's more different protocols on different chains doing the same thing.
Yeah, very nice.
Thank you.
Thank you, sir.